Great. Thank you very much, and welcome to the late afternoon crowd who has stuck with us. There's more to come after this, but thank you for sticking with us today. We're meeting today, as somebody else talked about this morning, exactly a year after the Indian chairmanship of the G20 announced that DPI was going to be a main focus of the G20. And coming out of the G20 year, we have actually made enormous progress, not only because the conversations have been ongoing throughout the year, but also because there's been international agreement on a definition for DPI, on the role of the private sector, endorsing the role of a private sector in the rollout of DPI. So we have something to work from. And we've had a lot of conversations earlier today and yesterday about how DPI can serve as a foundation, a platform, a set of rails on which to build private sector enterprise. And when we talk about that, one of the things, as a session earlier today captured, one of the things that we're really talking about, or one of the things that keeps coming up, is the idea of democratization. And when we talk about democratization, what we're really talking about is the lowering of costs. The lowering of costs that allows for businesses to serve more customers with more services. And in the past, when we've seen that kind of lowering of costs, we've also seen two other things happen. One is that when you lower costs and you democratize who can produce things, you often run into a problem of trust as large numbers of new actors rush in. Consumers don't know who to trust, and perhaps this is nowhere more evident than in the news business in the last 20 years. And you also have, in the digital economy, this factor where the network effect that we know well gets kind of supercharged as cost goes down. And so you have an incredibly difficult time managing what is a natural tendency towards monopoly in order to preserve a competitive environment. And so those are kind of backdrop for this conversation. And as we go forward, I'm going to ask individual questions of our panelists, but I think there are several kind of broad questions that we should be thinking about in the back of our minds. One is kind of, what is the scope of the economic opportunity that DPI presents, both country by country and globally? Another is, how do we preserve a truly competitive environment so that those benefits that we all hear about can be captured, and captured by human beings in terms of improving the welfare of individual customers, consumers? How do we build trust in a context of trust deficit? And which actors need to be able to collaborate, both within countries and across countries? So, Anand, I might start with you, and ask you, what signals do existing big businesses, of which MasterCard is one, need from governments in order to feel comfortable kind of charging into this new space, using this new foundation?
Yeah, absolutely. And I think I may piggyback on points that you just laid out in your introduction, right? The G20 in many ways, I think, was a seminal moment for DPI in terms of providing clarity that this is not a passing trend. This is something that is here to stay. And in many ways, I would credit the work, folks like Carnegie, folks around the table here, of cementing this into a real force that every private sector company is now thinking about. If we had this conversation 1 year ago, I think many of the companies would, folks who were familiar with the India context would certainly know what DPI was. But I think globally now we are trying to reckon with what does this mean for business strategies writ large. So I think that element of definitional clarity around what DPI is, what is not, is very important. Secondly, recognizing the fact that the private sector is a player in this environment, right? Even that comfort alone is important, because you're making investment decisions, with both a short-term impact but also a longer-term impact. And the time horizon, the notion that you will have a stake in this economy and in this ecosystem is absolutely crucial to giving predictability to a company making investment decisions on that time horizon. So I would say the recognition of the role of the private sector is the second piece. The third is, ambition to take this forward in terms of, if the past couple of years was DPI rollout phase 1, can phase 2, now post G20, focus on how do we do this in a more sustainable, secure, trusted way in partnership with the private sector? And I think that opens up a bunch of different opportunities that, again, 2 to 3 years ago, I don't think would have necessarily been apparent. Now, to your specific question of what do private sector companies like MasterCard, who have a lot of expertise in operating a large network, need to be a part of this ecosystem? I'd say a couple of things, and not just MasterCard, but I think any large and even small business. You need a sense of where the revenue streams are going to come from this. And I think oftentimes when we talk about DPI, we think about donor funding, we think about kind of RFP processes that we're looking to get disrupted. But just the basic unit economics of DPI, what does that look like? Where are those revenue streams? Second, we need a runway, right? If we accept the proposition that DPI and building on top of DPI is focused primarily on inclusion, I think a private sector company also needs a runway for where can they see growth? What is the time horizon under which they will see growth? What are the sectors or avenues where they can accept a smaller margin in one area, a larger margin in another area? So those trade-offs being very clear and being apparent from the beginning is key. So runway is probably the second R. The third R that I would think about here is also just thinking about the rules and regulations. So we've accepted unit economics on revenue. We have a runway. What are the rules and regulations that define that 5 years down the road you will still have a role and kind of a room to play in this ecosystem, right? If you can provide those three things, revenue, thinking about the unit economics of this, the runway and the clear path to finding growth, and the rules and regulations that give companies predictability, trust. I think those three things are the building blocks for attracting tremendous private sector investment in the DPI ecosystem.
Sabine, if I can come to you, because I imagine, and you and I haven't talked, but I imagine that you're thinking less about how to get MasterCard or other large companies involved in DPIs and more about how DPI can be a basis for smaller companies or small businesses that may be one person. And I wonder how you think different signals need to be sent to smaller economic actors as DPI is built out in the context that you work in.
Dan, thank you very much, and thank you to the organizer. This is my first time at the Global Tech Summit, and it's really impressive to be here today. I work in a philanthropic program that's focused particularly on the payments layer of digital public infrastructure. We work with African governments, private sector associations, and also the regulators. And our sole objective is really to scale up the deployment of these digital public infrastructure, particularly at the payment level in Africa. So I play a funny role because I work with the private sector, understanding the barriers in the ecosystem and advocating on their behalf with the regulator. And I work with the regulator in making sure that the infrastructure is as inclusive as possible. And I work with customers and understanding their barriers as well and bringing that into the mix. So often during the meeting, I've heard a lot saying the private sector is a key stakeholder in the ecosystem. I actually beg to differ. I would say the private sector is the driver of the scalability that we are all seeing in the ecosystem here in India. There is no reason to have highways if there's no traffic on it. And it has taken private sector, bank, non-bank, startup, fintechs, to really build the layer for usability for customers to enable the scalability we are seeing here. With that in mind, from my perspective, the question is really what are the incentives that regulators and governments are putting in place when they're building the infrastructure for the private sector for fair competition within that ecosystem. And I see in these incentives 3 areas that we can look into. One is leveling the playing field, whether big or small. All private sector have an opportunity to actually build solutions. And if there is interoperability at the digital rails, whether it is on the identity side or payment or data, this opens definitely the opportunity for any private sector, again, big or small, to come in and develop these innovations that we're trying to build in the ecosystem. Develop customer-centric solutions that will actually bring this solution or this infrastructure to the last mile, to the poor, the ones that are actually excluded usually from the financial architecture. So I think that interoperability is a layer in that inclusivity of the ecosystem that would enable private sector to play a role, especially the small ones. I've worked in West Africa and Central Africa, and I remember 5 years ago with the mobile money operators, the biggest challenge for startup were actually being able to negotiate the usage of the rails so they can bring their innovation. And for a lot of them, these innovations never came to fruition because they just couldn't get in. So by having these interoperable digital public infrastructure, we take out that layer and we enable a fair competition in the ecosystem. The second part of it is we've talked a lot about innovation and how this is important. Yes, it is. Again, what is the incentive? So in building this infrastructure, especially on the business case side, private sector has to be part of the building the infrastructure. It have to be part of the discussion on the business case. So there's a win-win, both from a government, both from an infrastructure perspective, customer inclusivity, but for the sector, private sector to innovate and compete with others to get a share of wallet for these customers that we want to serve. And last but not least, from my perspective, is there's a great opportunity for us to fast-track the realization of the Sustainable Development Goals through innovations that use the digital rails to enable sectorial innovation, whether it's in agriculture, in health. It's those opportunities have to be incentivized for the private sector to take a stick at it. Because again, I think earlier somebody mentioned, they're not philanthropic.
You make the point, which I think sometimes gets lost in these conversations, about the fact that when we talk about DPI, we're not ever talking about a fully public venture. I mean, I guess we could be in theory, but the examples that we focus on are not fully public. The private sector is playing a role both in the hardware and the software of the infrastructure itself, even if it's publicly directed or things like that. And I think one of the interesting things about the question about where new forms of collaboration emerge is that, broadly speaking, DPI exists because of a market failure that when solved can enable new markets to develop and new customers, new businesses to develop and new customers to be served. Peter, you're doing work that has kind of falls in another circle of this Venn diagram, and I wonder what you think about the kinds of collaboration that we'll see going forward as DPI expand, and what kind of new forms of collaboration might emerge.
Yeah, thanks, Dan, and thanks for inviting me here to speak. I would say we fit in between the private and public sector. We are a non-profit that seeks to create a club good, what economists call a club good. If you were here yesterday, you would have heard Nandan refer to GPS as one of the original DPIs, Global Positioning System, which was implemented by the US military and then opened to public use, and it didn't really explode until it was embedded in every smartphone that started coming out, which saw then now 70% plus of Google's revenues come from location information that it gathers. So there, we focused on creating a non-profit data trust that would try and solve the problem of a failed public good in much of the world, which is governments' inability to map themselves. And this is one of these sort of arcane problems that ends up being a big one, because the governments that most need up-to-date map data are the ones that are changing the fastest and have the biggest problems. So we looked at that and we said, well, there's a failed public good. There's an inherent market inefficiency, because while Google Maps generates enormous amounts of spatial data, map data, it's actually very inefficient for them to pay to map the world. And Apple Maps needs to map the same world, and it's very inefficient for them to map the world. But there's no way Apple's going to ever rely on Google Maps for its business. So we said there's a failure in the market really efficiently. So if we produce the lowest level of good, and this was really important in defining the good, and is in the heart of what a club good is, the good itself cannot compete with what the members want to do with the good. And this is when we became experts in licensing. And one of the things I would throw out for consideration when you talk about market innovation is actually licensing becomes critical. There is tremendous amount of satellite data. It's fantastic. You all see it on Google Maps. But it's not owned by the countries. It's owned by private firms or the European Space Agency or NASA. And while some of it may be shared publicly, it still doesn't belong to the government. And there are restrictions around licensing. And it becomes very difficult for others besides Google to leverage licensing against the private providers of satellites. So if you're a small company trying to innovate around satellite data, you have no leverage whatsoever on the licensing terms. And you will pay more to derive works from the satellite map. So we said, we have to solve that problem. We have to produce data that the government owns, which we then make available at very low cost to as broad a group of actors as possible, including non-profits and for-profits. And where we're going to extract the value is that the companies that want to create derived works from our data will pay us a fee, and that will allow us to pay to produce the data for the government on behalf of government. I won't go into the details of all the model, but what it means is that we ask for a contribution to join the club. So we have a club, the government owns the data, they give us a copy, a license to put a copy in a trust in the UK. Once it's in the trust, it can never leave the trust. It means we can't sell the data ever. But what we do is steward a membership that agree to terms and conditions of use, including ethical conditions. And the cost to play in that club is $500 a year. You have to be an organization, you can't be an individual. If you create derived works that have no commercial value and you're not selling, there is no additional fee to access all of the data in the club. But if you commercialize it, you pay us a one-time unlock fee. So the cost is very low. There is no pay to play. We have 3 committees that decide licensing and pricing, technology, and governance. And a small organization in Africa has the same voice that a Google does at the membership level. So this is the model that we've sought to work through. There's more detail, but we are constantly pushing to say new innovation in DPI, perhaps open the lens a little bit, and we think the club model may have parallels for others working around DPI. Thanks, Dan.
It's really interesting, and it's interesting to think about other forms of data for which that kind of model might be forthcoming. Harsh, I want to come to you and kind of a 2-part question. One is, we've heard, it's hard enough to imagine rolling out DPI domestically within a domestic context, but we've heard repeatedly that part of the magic of DPI will be the interoperability across borders and the way that it facilitates activity across borders. And I guess I'd be interested in your take, as the company that you work for provides a lot of the infrastructure for the eye of DPI, how you think about where that is most likely to develop and what needs to exist among actors in order for that to develop. And then also if you could say something about, because you work on the infrastructure side, about how you think about the trust problem and what kinds of focus on issues like cybersecurity needs to be raised in order to solve the trust problem.
Yeah, thank you, Dan. Thank you for the invitation. I think it will be important to kind of first explain what we do. We are the largest infrastructure service provider in the world. We have more than 1,000 customers. And it's not that DPI type of problem has not been solved in private sector. If you think about any large corporation where they have to do business in multiple jurisdictions, where they have to follow multiple regulations, where a customer might be in one country or another, but they're kind of getting similar service, where the infrastructure has to provide what that customer is looking for. So there is a level of trust that a customer has built around a company that's providing a service. Like, so I think if you kind of put it in that context, and I would actually take one example that would kind of bring this to home. If you think about the largest market in the world, like we would call foreign exchange as the largest market. Like, there's no one single exchange that acts as a clearing. There are individual exchanges that exist in different jurisdictions, but it's a 24/7 market. So how does this market operate without any nuance that we ever hear? Now, there are about 80 banks who actually came together over a period of time that agreed to create a company called CLS, which is called Continuous Linked Service, which now acts as in a multi and bi-directional clearing agency that works across, which means each bank, and there are 35,000 participants. So there are 80 banks that own, but there are 35,000 participants who actually use the CLS as a clearing. And the amount of the transaction they actually deal with, and I think some of you may have to open Wikipedia or calculator, it's more than $1 quadrillion that get transacted. Like, so that's the scale. They're running an infrastructure to allow all these operators, who, by the way, compete with each other. But at the same time, they understand the use case that they're operating under. The world trade would stop, but they are operating at a scale where they know they compete with each other, but they're also carrying risk against each other. So if the market doesn't operate the way they want, they'll each one of them will not be able to make profit. Like, so that's kind of a use case which is very relevant for them, that risk has to be mitigated, removed. They have to create their own value so they can make profit, and they can rely and trust on the infrastructure. Even though they compete, they're all part of the same governance. And that infrastructure is kind of, over a period of time, we actually work with the CLS to help them, and we'll actually continue to work with them. So we are kind of what I call a trusted service provider, but at the same time, those banks have created a governance mechanism, a clearing mechanism that allows them to operate in multiple jurisdictions, multiple regulatory environment, multiple exchanges, so many market participant, yet nobody hears about this being an issue. So there is hope for globalization, but there has to be a use case that allows the right forming, norming, and a resilient and sustainable, secure environment that's given, that all participants can build a trust. Because if trust doesn't exist, it could become a geopolitical issue when you think about globalization of DPI. Like, so kind of, I hopefully that can addresses both part of your question.
Yeah, I mean, the emergence of DPI as a new category of critical infrastructure that becomes a geopolitical target is certainly of concern both to governments and to private sector actors whose businesses are increasingly dependent on them. What I think is interesting to try to tease out is the theory of the case for the economic case for DPI. The one that I hear repeatedly is, create this platform and then see how 1,000 flowers bloom. You never know what businesses are going to be created, what new innovation will come out of this. What you're talking about is actually a very specific use case where this is not let 1,000 flowers bloom. This is about a cooperative venture that is set up to solve a specific problem. And I guess one of the questions for us to think about is whether or not there exists a way to do the 1,000 flowers bloom across borders, or whether for the near term, the only examples of kind of cross-border DPI will be ones that are purpose specific.
If I go a little bit deeper, while transaction is transaction foreign exchange, it's actually supporting the global trade. And in each market, this didn't evolve into 80 banks on day one. Mm-hmm. Each foreign exchange, kind of, if you go 20 or 25 or 30 years back, the foreign exchange was getting traded in that market, very illiquid, not many currency getting traded. Like you might have US dollar and some other Japanese yen, but the fact that a few saw this, that allowed them to start to think beyond the competition. They started to think about collaboration and what governance and arrangement that would allow them to interlink global trade with global foreign exchange to a trust-based underlying mechanism. So I would say on day one, when CLS started, going back to that example, there were only 30 banks who started. So there was a common alignment that allowed the forming to happen, which allowed others to say, look, I can also participate. So the economic case is that you had to bring all of them to think about the risk mitigation. And if you look at the economic case in this specific case, in 2008, 2009, when financial crisis happened, nobody heard about any foreign exchange issue. It was mortgage-backed securities, real estate, stock market going. There's nothing that happened in foreign exchange. So I think the risk element, reduction of risk, creates an opportunity in a very different way that didn't exist in the past. The security and the cybersecurity element that's becoming very crucial now. So not that, as an example, in India might be the 5th most targeted cyber attacked country. So how do you respond to this scale of external threats where individual companies start to build their own infrastructure? How do you actually start to manage this type of threat, which is not at the level of skills that exist in the market? You'll never be able to scale unless you also think about DPI. But the con side is if you have that, now you might be target of a state level cyber attack. So there are pros and cons, risk reduction. So that's why it's important to think about a use case that you can align the right bodies to come together to really create the business case where you can bring other parties together, but then you have to have trusted parties who are running it.
Right.
Otherwise it becomes like a state-sponsored element rather than...
And it's unclear that governments are actually in the best position to be those trusted parties. And part of what governments need in order for DPI to attract the kind of investment and innovation that they want to catalyze is for companies large and small to be able to trust that the government will report vulnerabilities accurately and be able to deal with them responsibly. Sabine, I saw you were provoked by this conversation. So I want to hear what you have to say.
I just want to bring maybe another perspective. Particularly, I work on the African continent. There are two examples of economic and monetary unions in Africa. One is the West African Economic and Monetary Union called WAEMU, one central bank, BCAO. The second one is the Economic Community of Central African State with one central bank, BEAC. Both regions have embarked on building at the payments layer an instant payment system that's regional. One is live with GMAC Pay in Central Africa, covers 6 countries, so open the opportunity for private sector to bring innovations beyond the borders of one and cover 6 countries at one. The second one is building right now in West Africa with BCAO. We hope to see that live next year. So that also opened. I just wanted to bring that perspective in terms of cross-border and the opportunity for private sector to also scale their impact beyond one country's border in an economic and monetary union context.
Which might invite some private sector actors to take the chance because the market's large enough now that the payments exist.
Absolutely.
Right.
And there's a bigger context in Africa with the African Continental Free Trade Area that opens even that market to the whole continent, provided, of course, that we can get policy, regulatory harmonizations to enable that type of scaling for private sector.
Right. Kamaljeet, as you look as a representative of a philanthropic organization at the rollout of DPI, I assume that you look at it through the lens of the Gates Foundation's mission, and I wonder if you could inject some caution here and say, obviously Gates has been a supporter of DPI broadly speaking. When you look at the rollout of DPI, what do you think are the pitfalls that private sector actors and public sector actors need to avoid in order for it not to become a bad news, in order for it to fail to fully realize the potential that it has to deliver economic development and increase welfare for the people who are in your scope?
Thank you, Dan. Before I move to the cautionary tale, I wanted to inject a bit of optimism to soften the blow a little bit. Because at the foundation, we have a principle that we believe in, that all lives have equal value, and we call ourselves impatient optimists. So from that is what gives us hope that DPI represents a way of exponential change, not incremental change. We have seen in many development sector efforts over the past, change has been very linear and incremental. I mean, if you keep adding 2 to 2, you can go from 2, 4, 6, 8, 10. But in a world where people need assistance so fast, we need exponential change. We need 2 to go to 4, we need 4 to go to 16, we need 16 to go to 256. And DPI sort of presents that opportunity. If we look at the story in India, with the launch of Aadhaar in 2008 or 9, in 10 years, financial inclusion jumped from 20% to nearly 80%. The BIS estimates this would have taken 50 years for India to do. So we have seen that digital technologies in India started having impact really fast. They started scaling really fast. And what happens in a system that scales fast is, yes, you get the good stuff, but one law of scaling is the bad stuff also scales. And this is where we have talked about cybersecurity, we have talked about trust a lot. But I would like to flip the question and say, trust is a very subjective thing. Who or what I trust is really based on my beliefs, values, and facts that I'm exposed to. I think the question we should be asking of DPI is on trustworthiness. What can the system tell us to prove that it is trustworthy? How can we build systems which can vouch for their trustworthiness, like principles of data minimization when it comes to ID systems, principles of interoperability when it comes to payment systems. And it is not only an infrastructure question, it is also a question of collaboration between the different incentives around the table. I don't call them sectors, because sectors are really another manifestation of incentives. Government has its own incentives, private sector has its own incentives, philanthropy has its own incentives. And as we look at DPI, this is where I think all incentives have to be aligned. We cannot over-index on the risk, and we cannot over-index on the optimism as well. So we have called out cybersecurity as a risk. I would say the risk of inaction is one of the biggest risks. So forget anything else. What if we do nothing? Are we better off? Or if we were to embrace the DPI approach, will we execute it perfectly everywhere? Probably not. DPIs could be well designed, DPIs could be moderately well designed, and DPIs may be badly designed. And I think getting a global consensus on what are the principles that we can all get behind and say, yes, this is a well-designed DPI, it is performing as expected, it is unlocking innovation as we had hoped it would. Nandan talked about the GPS as the original DPI. Now imagine you're in the 50s or 60s and the satellites are being launched. At that point, were we making an economic case for a Google to exist or Uber Eats to exist? We were not. And I think we must have an admission of we will not be able to see that far into the future, but the principles of what we build, we can do that right. So when the GPS was built, when the internet was built, the idea of interoperability, it was well thought through. So today I would not be able to make a phone call if the person I'm calling has a different carrier, a different handset device on a different protocol, different spectrum allocation. This is something that interoperability drove as a principle, and it created markets. It created markets where markets did not exist, which is why I agree with Sabine that private sector is not only a party at the table. Private sector is the driver for scaled adoption. It does not work. We cannot get scale unless there is an economic case for DPI. And sometimes it is not even a straightforward economic case. So for example, if we were to look at how much does it cost to run Aadhaar? I don't know the exact numbers, but I can tell you that the use of ID systems to root out ghost beneficiaries, to reduce corruption, has already led to like billions and billions of dollars in savings. So when we look at the economic case for DPI and the risk-reward trade-offs, coming back to what I would caution on, it's a full equation where we have to look at relative benefits and relative risks. So that's what I would end at.
Great. Anish, I'm going to ask you an obvious question or a question that has been lurking throughout, but that I think needs to be answered, which is, why does the Foreign Ministry, or why does the Ministry of External Affairs care about DPI at all? Why is this a mission of the Foreign Ministry? Why it's unusual. It's not obvious that that the Ministry of Foreign Affairs of any given country becomes a kind of evangelist for a particular technological phenomenon. And so I wonder how it fits into Indian foreign policy. And then the second part of that question is, as you think about that, it seems to me that one of the risks to India's evangelism for DPI is that it develops in such a way as to become balkanized in a way, not the way the internet did, so that it spreads to one part of the world but not another. And I wonder how you think about the private sector as a partner in trying to make sure that it is truly, as it develops in various places, it is truly interoperable, which is what I understand to be the kind of vision of Minister Jaishankar and others who are espousing this as part of India's foreign policy.
Okay, thanks, Dan. So first question, how MEA has come into the role of DPI. So when India took the G20 presidency, so first thing India did is that we said while agenda setting, the agenda will be not the Indian agenda, it will be the agenda of the Global South. So we organized a Voice of Global South Summit, and from there it came that the countries of Global South want DPI to be spread across the, at least in the southern part of the Global South countries. So from there, MEA involved in this DPI things. And second question is about the role of the government and the private player. So look, if I start with the nomenclature of the DPI, so it's a public good. So the public good generally has to be provided by the government if there is a market failure and if the government has the ability to provide it. So, and if the government foresees a market failure in those kind of things, like if there is a chances or likelihood of monopoly or information asymmetry, or the basic features of the public goods being destroyed, that it is not non-rival and non-excludable.
Speaking of the mic.
So the role of the government is that while designing the DPI, they just have to come in, provide the policy framework, provide the regulatory framework, set the boundary conditions so that the fields are level playing, and then leave the rest to the private players to build innovations over and above that. So I will compare it with the way the hard infrastructure is provided with the public and private collaboration. There also, what government does, they provide the land, they provide the basic law and order situation, they provide basic utilities, and then private player comes and build the hard infrastructure. So similar here in the digital infrastructure, the role of the government is limited to provide the basic regulatory and policy framework, address the core issues of threats like data security. And I will say now the data security, we have gone, the threats are beyond data security. Now we are talking about the data sensitivity, which is over and above the data security. You have to talk about the sovereignty issue of the data. You have to talk about the privacy issue of the data, consent-based management, how the data is being shared. So on these kind of things, government has to set the boundary conditions, and then over and above the field is open, the level playing field is open for the private players to flourish innovations over and above that.
When you, Sabine, I want to come back to something you said, you mentioned almost in passing, and I'll invite others to come in on this, and then I'm going to turn to the audience in a couple of minutes and invite questions from the audience. But you made mention in passing of what happens when there's one private, in this case, private sector actor who controls payments, and how hard it is for smaller businesses to then negotiate to be able to either enter the payments industry, or frankly, you get a rent-seeking problem where smaller businesses in that particular region are not as competitive because of the rent-seeking of the monopolist. How do you think about how to make sure that there isn't a flip side of that problem where the government is controlling too much and it actually stifles innovation on the other side, because companies are worried that the government might take action against them for political reasons, or might decide to throttle the services or the availability of the infrastructure going forward. How do you think about the trade-offs between having a too powerful private sector actor or a too powerful government actor, and how you build a business ecosystem somewhere in between those two extremes?
It's an interesting question. I would say it's the proverbial, half full, half empty, depending on, where you're looking, how you're looking at the issue. I think from our side at African End, what we've felt is that we need to make sure that there's a balance between the role of the government or the public interest piece with the incentive for the private sector, and of course looking at it from a customer side. So we came up with what we call an inclusivity spectrum. We don't believe it's a yes or no, but in that spectrum there are three lenses we look at it. One being the inclusive functionalities. It has to be available to all customers regardless of device, regardless of connectivity they have, regardless of supplier. It also has to have, at the bare minimum, a use case approach and enabling the minimum use cases. And if you look at it from a payments perspective, person-to-person and person-to-merchant payments, bare minimum. But that is just a basic inclusivity. So you haven't done much yet to enable, the potential. And potential is nothing until it's realized from our perspective. So the second lens we look at it is the inclusive governance piece. And that's where I would say government or regulator, and of course I'm looking at it from a payments perspective, it applies also to the ID and data layers. How do we make sure that there's a level playing field for all stakeholders, bank, non-banks, fintech, startup, big, small, to actually access the system? So that's from a supplier's perspective. Of course, the flip side from a consumer perspective as well. The second piece being, how do we make sure that interoperability is happening at all layers, all-to-all interoperability? Because then those rails are really incentivizing any to come in and apply the innovative ideas or solutions they have without having to worry about the cost that you have to invest in building the infrastructure rail. And the third piece is we feel that government regulator has a role to play in the inclusive governance to balance the interest between private sector and the public interest phase of DPI. And it's a fine balance, I agree with you. But this is also for us part of the inclusivity spectrum. And the last lens we look at it is really driven by customer centricity. So all of the use cases that would make the digital public infrastructure adopted easily by all, it's the usability and how all use cases are enabled for all perspective. How it is also protecting the consumer, because that's a key piece also of inclusivity, not only from having transparent recourse mechanisms, but also, coming back to you, the cyber security of the platforms to make sure that we are indeed safeguarding the interests of the consumers that are using it. And last but not least, another component for us to look at it is that if it is inclusive, then because of the competition that's enabled with the private sector and the leveling playing field, it should become more affordable for the client and therefore incentivize even further adoption from the usage. So it's really, again, not a yes or no, but it is a pathway towards mature inclusivity that we can drive collectively with the different stakeholders, private, public, and also philanthropic programs such as ourselves, funders such as the Bill and Melinda Gates Foundation and others. I think there's a long way for us to work towards that inclusivity of digital public infrastructure that will make, at least from my perspective, the digital transformation in Africa one that leaves no one behind.
You've outlined some substantive elements that could go into building a system that attracts trust both from consumers and from businesses. There have been several models of building trust that have been talked about today. One that hasn't been talked about is brand. I mean, MasterCard is a known brand, and so people feel comfortable using it for payments because they know that one side the payment will clear, and that if there's fraud, they have some right of recourse, et cetera. And then there have been CLS presents a cooperative model or new innovations in licensing. These processes of governance that need to accompany the development of DPI in order to make both businesses and consumers feel like they can trust it are really interesting, and there are different models that have been exposed today. Harsh, go ahead, and then I'm going to turn to the audience for questions.
I want to give a perspective which is important. It's an industry perspective. The industry, as they have become profit-making organization, over time they have built humongous infrastructure to run their business. So when we think about the new way of digital operation, interoperability, if you're going to force the industry operators to kind of come and transact in that environment through their infrastructure, which may have been optimized for how they're running the business, because nothing like this existed. So now you're creating friction and cost for them. So how do you create a paradigm that all participants want to come? Now, we thrive as a business because we operate in different environments. We help our customers, and we deal with different customers in different maturity phase. So I think we will continue to try, because we don't think the environment is going to be one thing. It's going to be a complex, immature state of businesses, different countries in different stage, different use cases. So I think it goes back to how and what use cases. I kind of come back to it. What are the use cases that's going to make certain things more useful, where industry and the governments and the consumers can all come together? Otherwise, it's kind of solving all the problems through digital platform is not going to happen.
Uh-huh. At the beginning, I thought you were taking Anand's talking points. Are there any questions from the audience for our panel? If not, I'm going to ask Peter to follow up on the question that I kind of left off on as I turned away from you, which is, now that you've had this experience, which took, I imagine, some kind of entrepreneurial governance thinking, where else do you think it could be used in the DPI space besides geospatial data going forward?
Yeah, so climate is obvious, and I should be clear on what our product is. We had to spend a lot of time getting rid of a lot of things we wanted to do. So our data is extremely high-resolution aerial imagery and street imagery of cities and small island nations. We don't cover the entire country with this detailed data. So think about it as satellite data on steroids. If you're a city, an African city, most of your climate applications are not serviced by satellite data. You need street-level data, and you need very high-resolution data. We have a small fintech startup in Ghana that's created machine learning models to find out where all the cash points are in Accra, because nobody knows where they are. We have a small island state that's just updated its storm surge modeling and its housing that is at risk because it has access to these data. We have others that Atlas AI, for example, is one of our partners. They're improving their machine learning models, which they currently use on satellite data, to refine their socioeconomic indicators, because they have the type of data now, the resolution and the detail, and it's exponential, the number of applications. So our strength is our weakness. There's almost unlimited use cases. And so people always ask us, well, what can you do with your data? And we say, well, how much time do you have? Because there's almost endless. If you look at, last point, West African cities, they are getting increasing rainfall. If you've ever been in Accra or Lagos, when it rains, it is inundating the rain that comes in. Well, unfortunately, through development, we have paved over and removed much of the green. So what happens, very simple, when it rains, it's got to go somewhere, and it goes to the lowest point. And if everything is impermeable, as it mostly is, then you get flash floods, and you get Accra shut down for 2 hours, and nobody can go anywhere and do anything. So how do you remediate that? You need the type of data that we provide. I wouldn't say we're not interested in developing those applications. We're interested in our ecosystem building those applications and making money on them, or providing new models of delivery and putting them in the public space. The other thing we've worked very hard to think about is creating a community of both public, research, NGOs, and government. Who's doing what? How did you solve this problem here, and how did you solve it there? Because remember, a government can only map itself, and the people that want to pay for these data are not interested in going to every government and having individual standards and individual licensing terms. And the only reason that we can squeeze anything out of the orange in terms of funding is because we have a standardized platform across geographies that make it easy and convenient for commercial entities to engage with the data, knowing that the provenance is there, knowing that we have full authority to put that data into the data set in the first place.
Really interesting. I don't see any questions from the crowd, but I can't also see very well. And I do see that we are running out of time. So since there aren't questions from the crowd, I just want to, if any of our panelists want to have a last word, please flag me. But if not, one of the takeaways that that I take not only from this conversation but also from the last couple of days about DPI is that going forward, we're going to need to continue to have a lot of really honest conversations about the practicalities because there's so much complexity and small details can change the incentives for legacy players or new entrants into the business environment. Small details can change the incentives so much that if we're not having ongoing conversations about what the incentives are and what different regulatory approaches or different communications approaches or different reassurances on cybersecurity are, we won't actually capture those gains. And everything's moving so fast that it makes actually the conversations and the level of honesty in those conversations ever more important because it's not only very complex, it's very fast moving. And in order to harness the benefits that everybody evangelizes about, we have to have those conversations so that governments and private sector actors can work together to make sure that the benefits are harvested. Thank you all for joining us today, and please give a round of applause to the panelists.